Hi, let's talk about eHome Household Service Holdings. It's a company that operates as an integrated household service company in the China. China stocks are falling. This company is not an exception. They fall. The stock price fall $12 basically through this day. That means almost 60%. And yeah, there's a bunch of risks. Of course, there's high potential. Health side, we see 6 out of 6. Earnings have declined by 6% per year over the past 5 years. Volatile share price, I think this highly volatile share price. Large one-off items impacting financial result. Profit margin is lower than last year's, so 13% compared to 20. Latest share price and events, so they actually entered they had IPO few months ago, Friday 14th May, and since that they are falling 84%, so pretty huge drop since then. Market performance shows that 7 days return is 4.7, 30 days minus 23%. Of course, those numbers, actually 7-day return is beating the industry and market, but not longer than that. And yeah, long-term price volatility considered as lows because there's no data relative to the market. The 5 years needed. Valuation side, basically based on the simple Wall Street, fair valuation should be around 6.36. This current price 20 is previous day's close. And currently the stock is at $8.35. Fair valuation, basically simple Wall Street shows that it has still room to fall, but Tip Ranks does not have any price targets, neither the Market Watch. So basically that is calculated basically through the fundamental analyze, and future growth for the industry that they're working in 37.8%. Past performance of the company, historical annual earning growth decreased by 6.2%. So they have this, the volatility basically last year, I think because of the COVID, and yeah, they came back to the same numbers that they were back in December 2019. And has large one-off loss of 3.1 million impacting December result. So yeah, many companies are, for example, selling their assets from the balance sheet, and they do have, for example, growing earnings as the in financial side. This is possible. Financial health side, we see that equity is all the time raising, so on the cash level, so they have pretty big amount of cash, 43 million, equity 44. They are debt free, which is pretty good, and yeah, balance sheet looks green, and they're actually profitable, so profit margin 13%, so this is very good. So basically based on fundamentals, basically based on the financial health, they are looking very nice compared to some other stocks that I do research here on the channel. Ownership, so we see no insider transactions, and ownership breakdown shows that insiders holding 41, general public 34, private companies 24%, and top shareholders, so there's actually, I think, last reporting holding date 31st of March. So there's no data basically what happened since then, and because they entered the IPO on the May. Simple safe dividends shows that shares outstanding are at the same level as they been through the few previous years. Total sales are actually increasing, and Finviz shows that this is a very highly volatile share price. The volumes are raising once again, so I think they did not have any. Yeah, so 24 million is the highest point. So I think many of the companies or households are adding this stock, so the volume are raising, and basically it's good to buy the shares when if the fundamentals looks good and there's no risk, basically when it's high volume and the price is near the same, but it's not growing. That is basically very good. And as I said, this is highly volatile share price, so those who entered since the IPO are losing 84%. And investing.com, summing the stock for long-term investors as a neutral by moving average sell. Thanks for watching this video, subscribe to the channel, like the video, and see you in the future one.